want to ask you about dual share class listings for ETFs and for mutual funds. Those who don't know, dual share class listings are being considered right now by the SEC, and it means you can access the same portfolio of stocks through two different formats, a mutual fund and an ETF. It's the same portfolio though, it's the same managers, it's the same holdings, same everything. The advantage is that it reduces taxable events in the portfolio. It's a shared portfolio essentially. Nate, could this help make it easier for issuers to launch active ETFs? Does this matter at all?
I think without question. I think that share class
and
structure.
Explain why too. This is a little nerdy for people to sort of wrap their heads around.
Well, yeah, so you mentioned some of the benefits, particularly on the tax side, but also operationally, it lowers the back-end cost for an issuer to bring a product to market. And if you think about how that has historically been done, it's been done through what we call clone strategies. Some issuers have executed a mutual fund to ETF conversion, but that doesn't work in every case. And with this ETF share class structure, they can simply tack on the ETF share class to existing mutual funds, and they're immediately in business. And if you think about this at a high level, a lot of traditional asset managers, they have the bulk of their assets in retirement plans and 401ks, 403bs, those sorts of things. That's a very lucrative business for them that they don't want to lose. But where is all the growth? Well, we know all the growth is on the ETF side. And so what this ETF share class structure would allow is for asset managers to have the best of both worlds, right? They can maintain that lucrative 401k business, but they can pursue the much higher growth ETF market.
So is this I mean, the SEC is considering this now. Yeah. This was, by the way, those who don't know, Vanguard had a patent on this that expired a couple of years ago. So this is why this is very exciting, because they really did well with that.
Oh yeah,
dual share class.
They made the ETF industry, in a sense,
yeah,
and built up their brand as it is today. My only question, I don't have the answer, is, okay, whenever they say, or we're going to go through with the share class, what is the order do they allow everyone to do this in? Is it everyone at once, or is there a staggered start? And then, not that this is kind of out of my wheelhouse, but what is the operational thing? What does the plumbing look like if you all of a sudden have thousands of share classes of mutual funds coming out in a few days or weeks? Or what does it impact the market at all? I'm not sure. I'm just very curious what the plumbing looks like for this, or is it going to be a nothing burger like T+2 to T+1 was?
Will this slow the conversion of mutual funds to ETFs that we've been seeing? If you have a dual share class?
Probably, because you'll have the share class of it.
Yeah.
Unless
Nate, what do you think? Will this slow the conversion of mutual funds to ETFs we've been seeing? If we get a dual share class?
I think 100%. Yeah, I don't see the need really for a mutual fund to ETF conversion if you can simply tack on the ETF share class. There may be some very unique examples where a mutual fund doesn't have much in the way of assets and retirement plans, and so perhaps it makes sense just to do a full ETF conversion. But I think a lot of the legacy asset managers, they'll simply tack on that ETF share class.
Now, you and I were just at the Exchange ETF conference. I was sitting in on a panel there of lawyers who said that this is imminent, that they think this could happen in the next 3 to 6 months.
Yeah, there was how many firms, 50 or so, lined up for this? So there's no question.
50 have applied for it.
Yeah, 50 have applied. Barring some sort of unforeseen circumstance, I don't know why it wouldn't happen.
Yeah.
Especially 50 times how many assets from those 50. You're talking trillions and trillions of dollars.
Are you hearing the same thing, Nate? I mean, at the Exchange ETF conference, there were some lawyers there that said this is going to happen. They felt very strong.
Clearly a hot topic. Yeah, no doubt, clearly a hot topic at Exchange. My impression is that the general sense within the industry is that this will be approved probably before the end of the year. But I think Todd makes a good point in that, let's say it's approved in the next several months. The question is, which issuers are actually ready for showtime here? Because there's a lot on the infrastructure side that has to be established in order to make this go. And so that'll be another interesting side story. It's one thing to have this approved, but can you actually operationally execute this?
Yeah, it's a fascinating question, actually. It could really change things dramatically.
I'm interested in it. I don't know the implications, and I'm not jealous of those who have to figure it out, to be honest with you. And especially in today's world where it's 24/7 headlines, market volatility is on the rise.
Yeah, it sounds great to me. I can't think of anything. Nate, is there any reason why we not be happy about this development? Is there something we should be concerned about? It sounds right to me, but maybe I'm missing something.
I think overall it's a win for investors. The SEC has expressed some concerns over what they call cross-subsidization, where essentially trading costs and other costs, say in the mutual fund, might impact ETF shareholders, or if you had massive outflows from a mutual fund and perhaps that caused some sort of taxable event, that could negatively impact ETF shareholders. So I think there are some cases on the edge that it could be a negative for investors, but I think overall it would clearly be a win.
Yeah, that seems the way to me.
Yeah, there's a couple examples of that, which I can't remember off the top of my head, that Nate was talking about with outflows from the mutual fund impacting ETF.
Yeah.
Years past.
We'll talk about this more in the coming months, of course. But here you have two of our best people here talking about active ETFs and the implications of a dual share class structure that's coming. That does it for this week's ETF Edge. My thanks to Nate and to Todd. We've asked Todd to stick around and provide more perspective on ETF trends in 2025 coming up on the ETF Edge podcast. And remember, you can see all of our shows on our website. This is our 7th year, folks, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.